Mm.
Quick run up here to the 57 area. Quiet all morning, then all of a sudden you have this one quick move here. Again, whatever we do, we talk about this all the time, is make sure you keep your stop in place because we never know what's creating the volatility in these moves. Very light. The ladder ticket is exceptionally light. I don't know why. There's hardly any 100 lots in there. A very light ladder ticket. Again, or the dome, whatever you want to call it. Again, different terminology means the same thing. It's just what I, uh, what somebody learned taught me or learned. Again, you can always, you don't like the price action, to give you a chance to exit some of those trades when it got back down to 57. That's always a choice. Again, there's no 100 lots up and down the order ticket. Kind of a little strange as to why that is the case right now. Kind of seems a little light. I don't. There's no. Let me check this again. There's no numbers now. Yeah. No. All right. Coming up here, pressing up against the coming all the way up here to 59 and change. Again, coming up here at about 60. Again, keep your stops in place. We're not going to love any trade we put on. Again, don't know why there's all of a sudden this urge to buy the market, but it's happening. Very quiet all morning. And sometimes, even though we have good reasons to trade, they kind of run through it for us anyway. So it doesn't really matter. And that's why we always keep our stops in place. Next level upside we're looking at is the 67 area. Something created that volatility. Like I said, the ladder ticket is very thinned out, kind of weird for this time of day. Usually there's good 100 lots up and down it. There's not that many. I don't know if somebody's talking right now or what. But something created that push up here. And again, you have to look at the market, look at the price action, look at the different, what's going on in the market, and then you have to make a decision. It got down to 57 for a second there, which I got out of a few of my contracts, and then had to get stopped out on the rest of them. But you have to kind of see what was going on. Like I said, I mentioned that the ladder ticket was very thin and remains that way. A couple 100 lots coming back in the market, but very strange for this time of day. All right, just kind of hanging up here on these highs. Again, we're not going to love any trade we put on, and keep that in mind. All right, we're looking at the 67 area next up there, and very nice little push here. Very, very quiet trade. Then all of a sudden you get this abundance of volume and pushing the market up here, even though, like I said, even though the volume was thinned out. But that's what happens. You're going to get um, you know, that's what happens. The trade you just saw there kind of happens more in the afternoon because there's lighter volume and you get more one-way push. But that's okay. Keep your stop in place. And we're not going to get hurt on any trade we put on, and you're always going to have an opportunity, hopefully, to trade again and work that trade as well. All right, let's see here. For the continued uptick, we're looking at the 67 area next. It was a year ago that Beijing and Moscow touted a new world order, but things appear to be unraveling fast in their economies. Export manufacturing activity and property prices are sliding in China, which has decided to stop reporting the country's rising youth unemployment rate, while a worsening debt crisis and deflationary spiral are threatening growth. It's in China, and that's why we went kind of down yesterday. The Chinese numbers were not good. The collapse in the commodity-based export revenues and extensive military spending has also weighed on sanctions in Russia, which just saw the ruble fall past the psychological important level of 100 to the dollar after tumbling 37% year to date. And market staying strong here. Got up to 63. We're looking at the 67 area. Did not have any place to buy there unless you bought our pivot. That was the only opportunity there that if you felt that the market should rally. But again, we try not to trade our feelings. But if you had a reason to exit or found a place to exit and you got in there at 47, that was the only opportunity. As far as price action areas to enter the trade, there really wasn't. So while the news has been grim, the countries have responded to their economic problems in different ways. On Tuesday, China slashed a range of key interest rates to shore up its economy, aiming to reignite growth and investment. And it followed missed payments by Country Garden Holdings, one of China's largest developers of real estate in the sector that accounts for a quarter of overall economic activity. On the other hand, Russia's central bank hiked rates by 3.5% at an emergency gathering, bringing the key rate to a total of 12%, fearing inflationary pressures that could ripple through its economy. As many Western companies have already pulled out of Russia or are attempting to do so, investors are keeping a closer eye on the impact of multinationals operating in China. Recent earnings calls from industrial players have flagged increasing headwinds, such as warnings from Caterpillar, Dow, DuPont. This is not good. Again, these companies make a lot of money from China, and if China's economy turns a little bit, I mean, obviously China's economy has been growing over the last 20 years. The gloomier outlook means China might miss its annual GDP growth target of 5% this year as it looks to sort out its economic problems. The first thing that needs to be addressed is concern of growing financial contagion of it, and the debt problems that span from local authorities to the central government. Declining domestic demand means shortfalls in tax revenues, while weaknesses in financials could harm Beijing's fiscal policy toolkit to help support its economy. So, not looking good over there. But again, that's why the market kind of sold off yesterday with those reports out of China's with their, I think, industrial production numbers and export-import numbers. We are still staying strongish here, looking at the 67 area next. If you wanted to buy it, I would say maybe around the 56 area, but not if you're a little aggressive. All right, again, continue to staying strong, looking for the 67 area. Overall, in the United States, July retail sales powered past estimates to rise 0.7% month to month as consumer continues to show resilience and bolstering the economy. As the market upticks here a little bit, looking at the 67 area. Strong performance from the auto sector and healthcare and personal care categories stood out, while Amazon's Prime Day provided a further boost. The retail sales and data indicate a 3% GDP growth is possible, according to some analysts, though there could be some challenges down the line. Economists also be looking at the release of FOMC minutes today for clues about the central bank's future path of monetary policy. So it's going to happen later. Market kind of staying strong here. Again, if you want to buy, got 56. Again, it's not my favorite purchase, but if you're looking to, I just be patient here because it can easily break down back down to 50. So not really excited about that either. But again, depending on your risk tolerance and what you're trying to do, as we continue to uptick here a little bit, we're looking at the 67 area. Nice rotation back, and this is right back into kind of yesterday's afternoon's range. We'll get it right up to 65 there. Seems like we keep missing our entry points just that much initially, and then obviously it becomes a little bit riskier when it goes and retests. All right, now we'll continue to uptick here. Again, if you have any questions, feel free to ask in the chat. We don't mind questions. Again, we are scalping. We're looking for taking advantage of ebbs and flows. Obviously, when we don't get ebbs and flows, we are not doing too well. We didn't get any ebbs and flows against that. Our first level there at 57. There's no ebbing or flowing there. Kind of ran through. So again, but got to believe in what we're doing, and we got 67 next, and be a little bit careful now, especially since as we come up here in this bar, the bar closed, so your entry point there at 66 might be a little bit more tenuous, got right up to 66 and a half there, and rotated off 65 and a half, so that's annoying. All right, well, getting a little, just missing it by just that much here this morning, at least right now. So be a little bit careful there against if you're coming in there at 66. Obviously, we just almost got filled, but we did not, and that's going to happen. And you can't get upset about it, and you can't just say, "Oh, damn, I'm going to wait for it to come back up here and I get it the second time." Because usually it's a lot riskier now, and you don't want to trade mad. So do the right thing. Adjust your level up there, lessen the risk a little bit, adjust your entry points a little bit to take that into consideration. So, I mean, we would have liked to have gotten filled on that last move, but we didn't. So, it is what it is. So you have to adjust there a little bit to take into consideration the fact that we just got right up to 5.5 there instead of 66 and then came off. All right. Well, a little support again, still around the 56 area, and see what it wants to do if it gets down there. We do have a number coming out here at 9 o'clock. We got the Atlanta Fed's inflation expectation index, and see if that helps us out here a little bit or not. Again, if you have questions, please feel free to ask in the chat. Patience is very important when we are uh, waiting for opportunities, and also keeping your stops very important. We're not going to be right every time. Part of the trading, not going to happen. So we have to look for the next opportunity. Whether you make money or you lose money on the trade, you're always looking for the next opportunity. All right. We're kind of a little range bound here. You see the bottom of the range there. If you were wanting to jump in at a higher price there, around 59 and change, 58 and change, I should say, if you were playing the bottom of the range there that the market created. I'm not a range player, but again, not everybody has to trade like I do. But there are, you know, you have to take bits and pieces of my trading, you have to take bits and pieces of your trading and put it all together. And, you come together with your own methodology. That's the one thing we talk about more than anything else. We're down ticking here a little bit. Again, a little support there at 56. Not my favorite, but it's there. Again, depending on how aggressive you want it to be. All right, market trying it down tick here again. If you're very aggressive, you're looking maybe at 56, a little support. Otherwise, gonna just be patient there. Again, 67 also on the upside there, kind of a little tenuous only because of the fact we just got up to 65 and a half there and came back off of it. So that's unfortunate. All right, we'll get down to 57 and change there. Again, if anybody has any questions, feel free to ask.
It sounds like your mic went dead on you, or you shut it off, one of the two.
It was the latter. Shut it off for a second there. But we're here. All right, we're just coming back down here again. We've got a little support there at the 56 if you're a little aggressive. I use Denmark pivots in your trading. No, I don't know what that Denmark pivots are, so I can't, no. Now we're coming down here to, if you're a little aggressive, you want to get long, we got a little support here at the 56 area. The settlement price there is at 54. Who has had the most influence regarding your style content? I don't, no idea. I did not hear person. All right, coming down here to our settlement price.
You'd have to say the floor.
Yeah, I mean, I get most of my concepts and ideas. Obviously, I've been training on for a long time, and can't say that I look. I've stood around. I think I don't know. I don't know. I've stood around a lot of great traders. 66 was the Denmark daily pivot. Oh, okay. That's all right. I didn't know that. I didn't look at. I don't know what Denmark is, and I obviously do not. I don't follow whatever that is. But I don't. Still a lot of around a lot of great. Weekly support. Oh, okay. We got. Well, that's good. Support number one there, 45, and we have 42. All right. Well, we're close. Well, you got to understand that people are looking at charts. I mean, they're looking at charts. I mean, charts do tell you one thing, right? They are, you're looking at value areas, you're looking at support and resistance areas. And so, I mean, they do come out of the same book as to what areas should be support and resistance, and it's just a matter of how you interpret them sometimes. We are trading here off of this 9 o'clock number that just came out, and I guess that's why we're getting this little rotation here to the downside. Got down to the settlement price there at 54, bounced off here a little bit. Like I said, I wasn't in love with the 56 area, but and then you did have to back it up there with the settlement price if you're a little aggressive. But again, the number is out, which is influencing the market here a little bit. This inflation Atlanta Fed thing, and so I should have mentioned it, but I got distracted there, so I'm sorry. But we don't like to trade numbers when they're released, and this is one reason. That the number was out, and we get it kind of pushed its way down here to these lows, interim lows, not lows. And we'll see what it wants to do. Blue band coming in there at 51-ish. Again, if you're a little aggressive, maybe you're doing that. But next support level we have is down at the 42 area. So a little support right in here. If you're, again, like I said earlier, I didn't love 56, and obviously I would not have traded it if I would have told you that the number was going to be released at that time, and that's creating a little bit of volatility here to the downside. Trying to hold the settlement price here. Let's see if it does or doesn't. Again, trying to hold the um, settlement price, and again, that's one of our kind of price action trades that we are looking for. Again, if it kind of ran through to 56, almost take the 54 as well if you were obviously very aggressive. But there was a number that was released at the same time, so kind of that was a reason that the market kind of pushed its way down here to this area. All right, again, kind of pushing off the settlement price area there. Again, that was kind of correlated with the 56 area as well. And trying to hold and push here a little bit. If you were looking to jump in there and get long, that was a little. Again, the reason we flushed down there was because of the number, and that created the opportunity. But again, you have to be a little bit mindful of that. Should have mentioned it to you that the number was released, but again, I got distracted right at that time, so I'm sorry. Again, the 56, 54 area, 54 being the settlement price, that held very nicely here. You did jump in there. Probably, like I said, it would have to take both of them if you did look into. And again, the reason we went down there was the market was that number that was released and created that opportunity here to get long there if you were looking to get long in a better price than up on top, and kind of held very nicely. again, how you trade those levels are traded one way, and then price action opportunities are traded another way. Definitely have to trade those price action plays a little bit lighter, and so that you don't get run over in case you're wrong, and also adjust a little bit because, like I said, at 56, but then the settlement there was at 54, so you have to take that into consideration as well. Let's see. Yeah, we're coming back up here to these interim highs. Again, be a little bit careful there around the 67 area, only because of the price action prior to when it got up here to 65 and change. If we're going to take that at all, again, it all depends on your risk tolerance and what you are, how you're going to manage that risk. Everybody here does it a little bit differently. So there's not one right or wrong way of doing this. You have to understand your risk tolerance and trade it accordingly. And sometimes we're going to get opportunities that are fast and furious, and other times they're going to just kind of just float around and not give us the best clean opportunity, and we have to make adjustments. All right, quickly rotating back up here. Looking at again, if you did get long there, you're obviously looking at the 67 area to exit. And if you're trying to get short here, be a little bit careful as to how you get in there. No, I'm not. I can't. I never got into soccer. I never got into it. I'm sure soccer is great, and I've stood and watched, been on the field and watching it, soccer kids play, and they are intense, and they're fast, and they're good. Some of them are really good, and I can't imagine at the pro level how good they are. So, but yeah, I'm just not that's just not a side. Just the interim play, the middle part of the game is like that. That's the part that doesn't get me excited. But like I said, I've been around, watching them close up, and they're fast. They're really good, and it's impressive. But it's the lack of intensity sometimes in the middle of the field that kind of gets to me. All right, well, we got right up to kind of 64 there and came off, I guess, and definitely be a little bit more careful there against the 67 area. That makes sense. I never thought about it that way, but that definitely makes sense. I can understand that actually, because there are a lot of U.S. soccer teams and soccer leagues, and I'm surprised. That's a good point there. I never thought of that, but that's probably a good reason why it's not hasn't taken off as far as television is concerned. Very good point. Because the kids play it, that's for sure. All right, we're just kind of drifting slowly back up here. Looking at again, be a little bit careful around 67. Not as strong a level as it was because we got up to 65 and change up there. So it's a little bit more tenuous. If you're more risk averse, you're looking at the 74 area. All right, we're upticking here. We're coming up here to these interim highs. We're looking, we had a little support there at the 56, 54 area, and then come back up here. And now we're just kind of hanging. You're taking long there. I mean, tried to stay long. You're doing okay. Yeah, if you got long there and just kind of took a little bit of a profit, that's fine too. If you didn't do anything, that's also good. Looking above here, be a little bit careful there at 67. All right, again, we just went again right up to 65 and come off. Definitely be a little bit careful there now, even if you could take the 67, 68 area. Definitely a little bit more riskier. So have to be a little bit mindful of that. Sometimes you just miss a level by a couple points or a point, and it's got to make that adjustment. Not everything here is etched in stone. You have to make those adjustments according to the price action and understand that you got to look for the next level. I think the next 74 would be better served than the 67. But again, if you're going to take it, trade it, adjust your trading accordingly. All right, coming back down here again, 50, 54 level, I guess. 50, anything below 52 out of any longs if you're looking to get long, if we get back down there. Again, that's second time down there. It's a little more tenuous if you're looking to get long. But it is what the market's doing today for us. It's not being clean. We're always have to keep making these little adjustments, just because that's because, and I'm missing our opportunities by just that little bit. Consequently, we're not getting clean looks at anything. I'd say the 74 would be where I'd be looking at as our next level of resistance, and be a little bit very, very careful there at 67. If you're going to take it, it's your, just a little bit, just to dip your toe there at 67, only because it is a level, but otherwise be careful there at 67. All right, pretty much range bound here a little bit. Again, the 9 o'clock number did flushes down to that settlement price area. And now we're just kind of range bounding it here again at 56, 58 area, kind of holding. All right, again, seems to be in range bound here a little bit, coming down to the lower end of that range. just kind of going nowhere fast, basically. All right, just kind of again, it's kind of a slow day, kind of going nowhere fast. Again, we're looking at the 54 area here as a little support. Anything below uh, 51, 52 out of any longs. If we get back down there. The levels this morning, our pivot this morning is 44.47. Support below at 42, 34, 24, 16, 08. Upside resistance we had at 57, 67, 74, 83, and 91. All right, quickly coming back down here, we said the 56 to 54 area would be a little support last time. Got down here to 55 and a quarter. Anything below 51, 52 out of any longs. If you're going to want to get long around here, we get your exit strategy all figured out, and then try to see where you are comfortable getting long with the number of contracts you want to trade. We have the only thing that's coming out later on this afternoon would be the FOMC minutes at 1 o'clock Chicago time. Otherwise, it's kind of a very, very quiet morning here. Kind of ran through our first level there, and then it's been just chopping around here. Not really giving us too many opportunities, just missing our entry points by just that much on the upside. And just kind of not really too exciting here. So patience is important. All right, coming back down here again, the 54 area would be our settlement price, and your exit strategy here, if you're looking to get long, would be below the 51, 52. All right, we did get right down to the 54 area there. Got right down to 54 there. We said that below support there. If you were looking to get long, a nice little rotation here. Off of the 54 area. So if you were able to jump in there around the 54 area, take a little bit of a scalping opportunity. You did okay. Again, below 51, like I said, you probably want to be out of any. Yeah, probably want to be out of any longs if you get down there. 51, 52. Again, it's close. Very low volume. That's the other problem. That's the problem really today. Let's just put it that way. That's the problem today. The low volume. But the 54 area worked, and they were able to take advantage of that little rotation there if you didn't want to get long. And a nice little pop back up here. So at least we make a little bit of money back there against that 57 area earlier. but have to be very, very patient and wait for it. That's the key here. But you have to kind of let the market kind of give you that opportunity instead of going out there and trying to create opportunity. We don't trade volatility. I mean, we trade volatility. We can't create it. So unfortunately, when there is lack of volatility, like right now, you have to be patient. All right, so the 54 area kind of worked here for us. So if we come back down there, we're not going to look for that support area anymore. That's actually going to be the third time it gets back down there. So I would probably, if you're looking anywhere, probably our pivot there at 47 or wait for the 42, which is a first support level. All right. All right, the 54 area here worked very nicely, and nice little rotation here off of it. If you are trying to stay long, that's a great move. If you took your profits, that's fine too. And if you didn't take the trade, that's also good. Just look for the next trade that makes you comfortable. All right. Again, it's just kind of range bound, but the 54 area held nicely, and rotated back up here a little bit. Again, if you're trying to stay long, you can have a trailing stop or just put a stop in there at 51 and see if we can get more out of it. But it's so slow, we might as well take some profits and look for the next opportunity, which might not happen until tomorrow, unfortunately. But it is what it is. No problem there, Steve. Have a good day. Glad you made a little bit. Nothing wrong with making a little bit when the market's not really giving us that many good opportunities. So good job. Anything that has to do with the Fed is mm, not good for us. We always get F on F days, so but we just stay out of them. Never had any. Never could. I just always waited for them. I never did well with them. So and then I'm like, why did I wait for it all day till 1 o'clock? Kind of silly. Now I don't care anymore. The 115, no, but it's a small upcharge for the education, so it's really not that much more actually. Talk to Brad about it. I mean, we do take, you're going to be, we're going to work with you individually, so it's not like we're going to be going in the classroom and discussing the trade and talking about what to look for. So it's more individualized, so it's a little bit more personal. And so there's a little bit more of an upcharge there because we're going to use real charts and help you understand what's going on that day and work with you a little bit. So it's a little bit more time. All right. Again, coming back down here, and if you had a trailing stop, you did, took some profits. If you got right up to 61.2 area and came off, again, range bound, very just boring trade. But again, we did have a little buying there at on the 54 area, and now we're just kind of flat. Like I said, downside probably looking if you're more risk averse, you're probably looking at the 42. Upside, if you're more risk averse, you're looking at the 74. All right, right back into the range here. Again, anything below 51 to 2 area, probably don't want to be long. We'll look down. A little support there at 47 there, our pivot, but otherwise, if you're more risk averse, like I said, you're looking at the 42. Upside, the 67, very, very tenuous considering the price action here with that double top there at 65 and change. So be a little bit careful. And if you're going to trade that area, I'd probably look at 74 as our next level on the upside. All right, they seem definitely got themselves in a little bit of a range here. Yeah, if you're going to play the range game, it's anything below 51, 52 out of any longs. So you have your exit strategy. You know what you are willing to risk, and you know, if you are, if you bought them down there at 55 and at 4 point stop, so you're looking at maybe 59 as an exit. Keep the support, keep your stops and profit targets kind of equal, at least 1 to 1, not more. But again, it's all what the market will give us. Sometimes it gives us more, sometimes it doesn't. All right. Well, let's see here. We're probably going to be a little range bound, but you never know when it's going to break out. If it does break out to the upside there, we got the 74 above. If we break down below the 50 area, probably, well, we have 47 would be a little support. And then looking at the 42 below that, upside, probably looking at the 74 is a good next resistance area. And kind of in the middle here, you gotta just pick your spots. If you like the range game thing, then go for it. If you don't, stay out of it. But it is definitely quiet, and then a lot of less opportunity, many less opportunities right now. But sometimes that's all the market gives us. So that's all we can take. And you got to just be a little bit patient and kind of let the market kind of do its thing, give us those opportunities if it ever does. If it doesn't, that's okay. There's always tomorrow, and we'll move on from there. All right, get back here in a bit.
Hey, a couple quick programming notes. If you have any questions about our services, don't hesitate to ask. I just posted the opportunity to sign up for the service so that you can come back. We look for 100% participation here. I posted it in the chat area. Below that, I posted the private coaching sessions. As a subscriber to this service, you're entitled to coach in private session with your trade along host. A supplement to that is coming in here on a daily basis and working with your trade along host as you're applying your newfound trading skills. So if you are looking to learn how to trade based on price action, your coach can teach you. If you're learning how to set the levels, your coach can teach you. If there are nuances of the trade and the trade craft, your coach can teach you. And then you pop back in here after your coaching session the next day. Coaching session is done in a private Zoom class between you and your coach. You have all the tools in Zoom, headset, microphone. You can share charts, screens, work with your trade along coach. And then as you're developing your newfound trading skill, you come in here as a proving ground and an access point to your coach as you're applying your newfound trading skills. You have could develop a one-on-one relationship with your trade along host / trading coach. And it's a great opportunity for you to do better in your trading. We're looking to trade 2, 3, 4, 5 trades here on a daily basis based on a price action trading methodology. We set key levels right around the cash open as opportunity points for trades. Did we repost those in the? I'm not sure if that was done today. Maybe Saul just repeated them a couple times. We start out the morning session by setting a pivot and other levels on top and bottom of that pivot, and we generally repost them in the chat area. Saul pops back in and he gives me the levels. I'll repost them for you, but don't hesitate to interact directly with your trade along host. This is a coaching session for the entire month in the trade along itself, and to supplement it are these breakout coaching sessions. So Steve, does that answer your question? Steven, how are you doing? Ranu, Philip, Mauricio, Lana, how are you today? Kurt, Dudley, Darren. Make sure you're signed up for the service. Self-assess, honor your trade along host. We know who does and doesn't. Just stop answering your questions. And then ultimately we exit you from our service. But if we have to do that, then you get banned, and you don't want to have that happen to you. So as they say, do the right thing. Hey, Stephen, welcome aboard. Yeah, that was a good choice. That saved you another $25 a month. We have people that are signing up for the 3-month experience here. We went from 400 to 150 a month. If you do 3 months, it's $125 a month. That makes a lot of sense. Don't hesitate to ask questions, interact with your trade along host. They are actively scalping in and around the same levels. You need me, sweetie? Mm-hmm. It's a good question. Saul, your trade along host today, is a 25-year veteran of the trading pits in Chicago. He's actively scalping for his own account. He's been doing this for a long time. He's able to walk and chew gum at the same time. He's an individual that you would seek out to help you if you were going into the trading business generally, as a private referral. And you can tell by his demeanor and how he handles the trading day that he's really good at this. Again, if you like what we're doing here, tell your friends. I'll be in the background if you need me. And we appreciate you being here. And if you can get the word out on this service, all the better. It's a nice group we have in here. And we're looking for additional good individuals that are looking to do better in their general trading. So if you're trading your own account with your own money, great. I have a link for you if you're interested in trading somebody else's money. Click on this link, read about it. I believe it's the same thoughts that if you're trading your own money, you should treat it as if you're trading somebody else's money. That's the link for that I just posted. I'll do something too. You want the big charger? You are, right?
I was reading earlier, I plugged it in and it was like weird, like, and it kept saying it, but then
Put in. I just sent it to him.
Please leave your message for 20. Hi, you've reached Margaret and Melissa. Please leave us a message.
So